Hello teacher, my name is Khoa. I'm from Group 4 and today we're going to present about the financial analysis of BHG Pharma, which is a pharmaceutical company in Vietnam. The table contains include 4 parts: the introduction, analysis of balance sheet, income statement, ratio analysis, and the last one is conclusion. Now let's move to the introduction. DHG Pharmaceuticals joint stock company. In short, DHG Pharma was founded in September 2nd, 1974 in Can Tho City. The company is listed on Ho Chi Minh City Stock Exchange in December 21st, 2006 with a ticker symbol of DHG. The owner equity, charter capital, email, and website are also shown on the screen, and also the company auditor is Deloitte. In terms of its size, the company has exported to 15 countries around the world, including Singapore, Russia, and Myanmar. Moreover, the company also has 2 Japan GMP standard production line. The company also has 12 subsidiaries, 34 sub-branches, 68 drugstores along Vietnam, with more than 2,700 employees. In terms of its reward, the company is the top 50 leading brand in Vietnam and the top 10 breakthroughs pharmaceutical company. In terms of the board director, it includes Mrs. Đặng Thị Thu Hà, who is the founder and the board director chairwoman of the company. Together with her, we have Mr. Kuroda Nakura, or in Vietnam, we have Mr. Phan Minh Tiên. They also hold the important position in the company, including the general director or the head of auditing company. About the majority of subsidiary, DHG Pharma owns 51% of Fuji Medical Company, but is no longer in operation since 2019. Besides that, Taisho Pharmaceutical Company, a leading Japanese pharmaceutical company, also owns 51% of DHG Pharma. Now let's move to the financial analysis. About the first list about the balance sheet, as you can see in the screen, is the balance sheet of both company DHG and IMB Pharma. Data I collected from the financial statement in the year 2018, 2020, and 2020 of the company. So let's move to the first part about the current assets. So both DHG and IMB Pharma witnessed the same situation. Both companies suffered a decrease in 2019 and increased back in 2020. In terms of non-current assets, it witnessed an inverse trend. While DHG Pharma decreased continuously, IMB Pharma had an endless increase. And in terms of the current liability, while DHG Pharma observed a fluctuation, IMB Pharma recorded a continuously increase over the year and reached its peak in 2020 at 346 billion Vietnam dong. Regarding long-term liability, while DHG Pharma also observed a fluctuation, IMB Pharma recorded a continuously decrease over year from 33 billion in 2019 to 19 billion in 2020. And the last one about own equity is also witnessed the same situation. Both companies have observed an endless increase and reached their peaks at 3,500 billion Vietnam dong for DHG and 1,730 Vietnam dong for IMB Pharma. And moving to the income statement. And you can see in the screen also the income statement, which is the data collected from the company website. And moving to the total operating revenue. So this tells us the amount of money the company can generate from its operation activity, excluding other sources such as financing or investment. So statistics show that DHG Pharma revenue reached nearly 4,000 billion in 2019, a far ahead of competitors in the same industry. The reason for this outstanding revenue is thanks to the product distribution network, with 34 distributors covering the whole country, accompanying that the production capacity of 7.5 billion product units per year. Moving to the cost of goods sold, this refers to the direct cost of goods sold produced and sold by the company. The reason for the increased cost of goods sold of both companies that is the most of the ingredient as well as technology for producing pharmaceutical product was imported from other countries. However, for DHG Pharma, in order to lower the cost, the company has successfully transferred and mastered technology, which is not only lower the cost of production, but also the price of pharmaceutical product. In terms of the total pre-tax expense, it illustrates the amount of money that companies spend for its operation activity. As you can see that both companies witness the same situation in here. And moving to the non-operating income is the amount of money changed due to the sources that are not related to typical activity of the company. While DHG Pharma observed a continuous loss, IMB Pharma recorded a fluctuation around 5 billion. And the last one is about earning per share. While DHG Pharma observed an endless growth, IMB Pharma recorded a fluctuation. So earning per share is a frequently used indicator for measuring corporate value since it shows how much money a firm produces for each share of its stock. The constant growth of DHG Pharma is a good signal for both company and its investor. For the company itself, DHG Pharma earned more money on each of its stock. For investor, is the side of the company making more profit, which will also have payback to investor. Yeah.
I'm new. Now we start with the ratio analysis. So first one, we will analyze about the liquidity ratio. So this calculate indicator including the current ratio, which ratio, and cash ratio to determine a company capacity to satisfy the debt obligations and its measures of safety. So move to first one is the current ratio. As can be viewed from the chart that both companies have a current ratio greater than 1, which indicates that both of them can maximize their current assets to satisfy the short-term obligations without facing a bankruptcy. Overall, in the last 3 years of operations, the current ratio of both companies have experienced an opposite change. In particular, in 2018, the DHG's ratio is lower than its competitor, while in the next 2 years, it has increased significantly and reached the ratio that's much higher than its competitor. So we can say that the ratio are in the acceptable range. So investors will have not to worry about raising extra finance to pay obligations because they are higher than the average current ratio of the industry at 2.22 times. Move to the next one is the witch ratio. So in general, both companies have recorded a positive witch ratio, which is larger than 1. And as can be seen from the chart, the witch ratio of both companies in 2018 have no significant difference. But in 2 years after, the DHG ratio is twice as high as its competitor. So moreover, in 2020, as can be seen that the DHG ratio have a decrease slightly and reached at 3.25 times, and this decreased ratio have reflect the ability of the company to convert the liquid assets to pay the debt is becoming smaller. Move to the next one is the cash ratio. So as can be viewed from the chart, both the cash is less than 1 over 3 years, which reflect that these companies are not in favor of using the cash to pay the obligations of their cash accounts and not enough to cover the debt. As can be seen from the chart, that's why the IMB ratio fell down sharply, which illustrates the ability of the company to pay debt by cash on the edge. Compared to the DHG companies, the cash ratio is much lower. So, and moreover, in 2022, DHG ratio is greater than the average industry ratio at 0.28 times, which illustrates a good sign for the firm because it has enough capacity to repay in the cash easily. And next, I will classify about the efficiency ratio. This ratio assesses the company capacity to effectively use its assets and manage its liability in the present or the short term. So move to the first one is the inventory turnover ratio. So with this ratio, the higher the rate is, the better the sales companies can generate. Overall, a similar trend can be seen in the inventory turnover ratio of both companies, but the ratio of the DHG companies is always greater than its competitor. And as can be seen in 2022, even though that the DHG ratio declined back to 3.35 times, which is lower than the average ratio of the industry at 4.62 times. This has reflected the weakness in the sale in 2020. Move to the next one is the day sale inventory turnover. With this ratio, the lower the ratio, the shorter of the day the company receives the cash from the sale. So on average, the DHG companies have this 142.22 days to convert the sale into the cash. This number is 1.17 times lower compared to its competitor at IMB. And from 2018 to 2019, both company ratio have experienced a massive decline which illustrates the speed of the receiving cash is faster. However, the day sales in inventory ratio of two companies have climbed back to 152 and around 188 in 2022 respectively. So next, my teammate Mai will continue our presentation.
Hello everyone, my name is Mai and we'll continue with the receivable turnover ratio. So this indicator measures the efficiency the company can collect the money owed by the customer or client. So in terms of the making comparison, there is a slight difference between these two companies. For DHE, the company witnessed the ratio increase in ratio from 5.8 to 7.57 times. It tells us the company account receivable is collected effectively, and they also have a high proportion of customers that pay debt in the short term. Meanwhile, IMP turnover rates are relatively lower than DHE, which maintained at around 4 times and decreased to 3.44 in 2020. It demonstrated IMP had the increasingly delinquent client, resulting in lower effectiveness of collecting receivable. Next is the day sales receivable ratio. So this indicator tells us how many days can the firm collect receivable from client. There's an opposite trend in ratio between these two companies. Throughout the period, the number of DHE has reduced from 63 to 48 days, whereas IMP had the ratio went up gradually, and it was more than twice the day amount of DHE in 2020 by 106 days. It can indicate that they need shorter time to transfer receivable into cash or allocate the revenue to other operation. The last indicator is the total assets turnover. The total assets turnover ratio measures the effectiveness of a company in using its assets to generate sales or revenue. The higher the rate is, the better the company in using the assets. As illustrated in the chart, both DHE and IMP did not experience much fluctuation in their rates as around 0.9 and 0.69 times respectively. However, DHE rates were always higher than the competitors, which can compare its advantages of their assets in generating sales. So moving on to the third type of ratio, which is the long-term solvency ratio. So this ratio is a crucial metric used by prospective business lender to assess an organization's capacity to satisfy long-term debt obligation. A solvency ratio is a measure of a company's financial health that determines its cash flow is sufficient to cover its long-term liability. We will discuss 5 following indicators in this session listed here. I will introduce the first two measurements and my teammate Neil will finish the rest of them. So the first ratio is the total debt ratio. The total debt ratio measures the company's total liability to total assets or the company leverage. Since both the company have a rate less than 0.4, there is a good sign that both of them have more assets than debt, indicating their business healthy and stable. In details, although in 2018, the DHE ratio reached the peak at 25.2% and was relatively higher than IMP for 10%. There was a remarkable positive change in the DHE proportion after 3 years, decreasing from 25.2 to 19.8%. On the other hand, IMP observed a negative trend as the ratio increased a little bit from 50.2% to 17.5% in 2020. Thus, in the last year, the difference between the company ratio has become smaller by approximately 2%. At that point, lender or creditor can trust the businesses in regard to their loan application. And the second one is the debt to equity ratio. So in the case of the, in the next slide, please. Okay, so in the case of a corporate downturn, the ability of shareholder equity to satisfy or the existing loan is reflected through this debt to equity ratio. The figure represents the similarity in both company business for not being really aggressive in financing its flow with debt staying lower than 100%. However, in 2018, DHE even had their rate mostly double to their competitors. Their rates remained higher than IMP throughout 3 years, 2018, 2019, and 2020, at the 33.8%, 22.8%, and 24.6% respectively, even though there was a reduction in its rate for 9.2% after 3 years. So to consider, the higher rates, the higher the ratio is, the higher debt the company has. Thus, DHE might find it more difficult and challenging to rely on the potential of equity to fulfill the application to creditor than IMP. For now, you will continue with other ratio.
So hi, I'm Ning. I'm the last speaker of the full presentation. Now I will talk about the last ratio. Firstly, about the time interest earning ratio. This is measures of a company capacity to fulfill debt commitment based on current income. Between 2018 and 2020, the figure of DHG Group has dramatically increased. This mean after paying obligation, the company still has money to reinvest in the business to scale up. While the data of IMPGXC show a significant decline, this tells us that the company is struggling in their business and they may have to raise their money to reinvest in the business if needed. And next, about the cash coverage ratio. This is an accounting statistics that assess a company capacity to meet its interest cost. According to the data in the chart, the figure of the DHG Group has marked an increased rate in on 3 years. This means that the liquidities of DHG Group is higher than their competitor, while IMPGXC has a very high amount in the first year, but in the next 2 years it keeps decreasing significantly. And moving to the profitability ratio, is including 2 parts, and I will talk about the profit margin first. The profit margin indicates how much money the company can make from its activities. As can be seen in the chart, both of the company has fluctuated in their profit margin figure. The DHG Group has significant change in the data in 2018 and 2020 at 16.8% and 19.7% respectively. However, in 2019, it decreased at 16.2%. And about IMPGXC, although it had a dramatic increase in 2020 at more than 50% between 2018 and between 2018 and 2019, there was a slight decrease. And about the returns on assets, this is the number tell investor how well a firm converts its investment profit into profit. The IMPGXC saw an ongoing increased trend in all 3 years. On the other hand, the DHG Group has their returns on assets figures starting from a high figure at 15.5% in 2018, but it has decreased slightly by nearly 15.2% in the next year and is keep increasing at 16.6% in 2020. About the returns on equity, this is a financial ratio that measures how successfully a firm manage the capital it has received from the shareholder. In the chart, it is easy to see that the percentages of IMP increase year by year. However, the return on equity of the DHG Group have fluctuated between 20.7% in 2018 as low as 18.7% in 2019 and 2020. The figure of the DHG Group increased by 20.7%, and the last ratio is the price to earning ratio, also known as PE ratio. This reflects how much the market is ready to pay for a stock now based on its previous or prospective earning. As can be seen in the table, the price earning ratio of the DHG Group is low in the range of 16.6%. 60.6 to 19.1 times, compared with IMPGXC witnesses a relatively high ratio at around 25 times in 2018, but a significantly decreased at 19.3 times in 2019, and it keeps increased at 20.3 in 2020. So in conclusion, to sum up, both of DHG Group and IMPGXC saw a significant increase in operational costs as COVID-19 pandemic became more difficult. And this is also the end of our presentation. Thank you for your time, and if you have any question, you can ask us. Ok, được đúng không mấy phút em?
Có 4 phút rưỡi rồi chị. Gì? Đúng rồi.
Vậy chắc mình kịp mà ha.
Dạ đúng rồi.
So hi, I'm Ning. I'm the last speaker of the full presentation. Now I will talk about the last ratio. Firstly is about the time interest earning ratio. This is a measure of a company capacity to fulfill debt commitment based on their current income. Between 2018 and 2020, the figure of DHG groups has dramatically increases. This means after paying obligation, the company still has money to reinvest in the business to scale up, while the data of the IMPD GXC saw a significant decline. This tells us that the company is struggling in their business and they may have to raise their money to reinvest in the business if needed. And next, about the cash coverage ratio. This is an accounting statistics that assesses a company capacity to meet its interest costs. According to the data in the chart, the figure of DHG Group has marked an increase rate in on 3 years. This means that the liquidity of DHG Group is higher than the competitor. While IMPGXC has a very high amount in the first year, but in the next 2 years, it keep decrease significantly. And move to the next part is profitability ratio. Firstly, I will talk about the profit margin first. Profit margin indicates how much money company can make from their activities, and as can be seen in the chart, both of the company have fluctuated in their profit margin. DHG Group has significant change in the data in 2018 and 2020, 16.8% and 19.7% respectively. However, in 2019, it decreased at 16.2%. And about IMPGXC, although it has a dramatic increase in 2020 at more than 15%, but between 2018 and 2019, there was a slight decrease. Next, about the returns on assets. This is the number that tell investors how well a firm converts their investment into profit. As you can see, the IMPGXC saw an ongoing increase trend in all 3 years. On the other hand, the DHG Group has their returns on assets figures starting from a high figure at 15.5% in 2018, but it has decreased slightly by nearly 15.2% in the next year, and it keeps increasing at 16.6% in 2020. And about the returns on equity. It is a financial ratio that measures how successfully a firm manage the capital it has received from the shareholder. In the chart, it is easy to see that the percentages of IMP return on equity increase year by year. However, the percentages of DHG Group has fluctuated between 20.7% in 2018 as low as 18.7% in 2019, and in 2020 the figure of DHG Group increases by 20.7%. And the last ratio is the price to earning ratio, also known as PE ratio. It reflects how much the market is ready to pay for a stock now based on its previous or prospective earning. As can be seen on the table, the price to earning ratio of DHG Group is low in the range of 60.6 to 90.1 times, compared with IMPGXC, which is a relatively high ratio at around 25 times in 2018, but a significant decrease at 19.3 times in 2019, and it keep increase at 20.3 in 2020. And in conclusion, both of DHG Group and IMPGXC saw a significant increase in operational costs at the COVID-19 pandemic, make everything become more difficult. And this is also the end of our presentation. Thank you for listening. And if you have any questions, you feel free to ask us via email.